Is there like a formula that if it's 400 to 500K and you invest that sort of, you buy a property to that value, you obviously don't need that much cash, but you can borrow. Can your ROI be as great as maybe investing slightly higher to a 7 to 800K place? Does it sort of, the more you invest, the more ROI you get? Does it work like that?
No,
or it can be quite...
it's across the board similar. And the markets are fairly consistent. So in Melbourne, as an example, at the moment, I'll head north. So we'll go start at the bottom of Melbourne. So Melbourne's about 4.2, 4.4% return from a rental standpoint. What does that mean? $500,000, you'll probably rent it for about $420,000. So you're still going to have to chip in a little bit. You know, you get up to a $700,000 property, again, you're a little bit off, so you will have to chip in, and it keeps going up. Sydney's the worst market in terms of return on investment, but Sydney's always had this ability to bank on capital growth. So, you know, if you're going to buy an asset in Sydney, you're going to spend more than every other market, and you're going to get a lesser return, and like it can be as little as 2.5%.
That's rental.
That's rental.
But
your capital gain generally is the best across the board, or more consistent.
Yeah.
And then heading north to the Queensland market, again, you're probably 4.5% return. So what does that mean? So that means what you're getting for your rent is your gross return on your investment, without pushing in capital gain. So if you looked at your overall rent, you could say you had a 4.5% return annually, and that's where you can get into tax deductions, etc. But we're not accountants. And then the other part is capital gain. So if you had your 4.5% return plus, let's say, an 8% capital growth, which has happened a lot recently in that Queensland market, WA market, your overall return year on year is 12.5%, which is very good when you compare it to other markets globally. And then when you compare it that you've only got 20% down on the asset as opposed to the full 100% like shares, then the returns are astronomically good.